Welcome to the Real Money Show. My name is Jeremy Wiseman, and I'm joined today by President Paul Wiseman. And great to have you with us. Jerry's on vacation. At Guildhall, we're here to help Canadians protect and grow their wealth through physical gold and silver. Outside the banking system, no counterparty risk, no broken promises. You can buy direct, store it in a secured vault that we utilize, fully allocated, segregated, and you can even hold it in an RSP or TFSA. Go to guildhallwealth.com or call us at 1-877-8-SILVER. We always encourage people to crawl, walk, run. And of course, you can start with a tube of silver maples or even an ounce of gold. Before we jump into everything, Paul, how's it going? How's your week? How's inventory? Give us a quick rundown.
Well, it's been very, very strange. I mean, the tariffs have caused all types of problems with dealers.
Yeah.
They still don't know whether there's a 25% tax to ship product into Canada, or vice versa. Can we ship product into Canada, into the U.S. Without paying the tariff? So we're very, very fortunate that we've got product coming in from Switzerland. We always do Valcambi gold. We're very fortunate as well that our silver 100-ounce bars, 10-ounce bars, 1-ounce silver maples, gold bars coming in from the Royal Mint, and we've got lots and lots of product. So availability we always have because we store with Brinks, the same vault that we store our depository, our private depository for our clients, as well as Questrade accounts that we keep the product at Brinks, and it's very secure, allocated, segregated to our clients.
There was a tweet I wanted to share with you this week. Robert Kiyosaki, who you know has been very pro-gold over the years, very pro-silver over the years, has become very pro-Bitcoin in recent years. And he put out a post just saying, here's why I love Bitcoin. And he said it's because there's a finite amount, a limited amount. There will only ever be this many Bitcoin. And I thought, this is odd. You know, you can only mine gold add to the stockpile by something like 1.75% a year. It's such a low stock-to-flow ratio that it would take, 50 to 100 years to replace all of the gold that's available, which is why it's such good money, that it's a store of value. And you're just thinking, what side of the spectrum are we on? I mean, that's pretty close to finite. Wouldn't you agree? Yeah,
I mean, and all the gold that's ever been mined is still above ground. I mean, whether it's in jewelry, whether it's in bars, whether it's in vaults, it's still there. And the cost today of mining is getting more and more expensive. So gold has to go up anyway.
Yeah.
Because just the amount, when you open a mine, it's not a turnkey operation. You just walk in and say, oh, look, I've got gold and I can sell this. It's not. The product is raw. It has to be taken out of the ground. It has to once it's out of the ground, it has to get to some type of refiner that has to then turn it into bars, or it has to then be shipped. It has to be insured. I mean, I had an awful time this week. I got to tell you, last week actually, because a lady sold back to us a lot of product, almost $4 million worth of gold. It wasn't all purchased from us. It was purchased from other companies and all types of brands. Well, one of the problems is we only sell top quality 4.9 gold. The same thing with silver. We sell 3.9s, the best we can possibly sell. But this was all brand names that some of these companies I think are out of business or we don't hear anymore, like Engelhart, Johnson Matthey. Some Australian bars nobody really wants. Anyway, I couldn't ship them across the border because nobody wanted to pay the tariff. So I've kind of got some bars that I'm kind of,
You bought it back.
Bought it back. And it's going to go up in value, so, someone will buy them. Eventually we'll sell it to, be melted down into 1-ounce bars or coins.
Well, you mentioned that mining's more expensive. The price has nowhere else to go. You're not the only one saying that. This week, Vince Lancy, writing for Scottsdale Mint newsletter, wrote that John Paulson, the billionaire investor, who, by the way, made billions shorting the housing market in 2008, is now predicting $5,000 gold by 2028. You know, given what
I
the
think
banks
that's
are,
going to be sooner than that.
yeah, I was going to say, given that the banks are always revising here, I think that could be very conservative. You know, he cites central bank accumulation, de-dollarization, and the waning trust in the fiat currencies. So, you know, there's another billionaire added to the list who believes that the price is moving much, much higher. What do you think?
Well, you know, fiat currency is getting weaker and weaker. I mean, you know, the US dollar over the last 100 years is now worth about 2 cents. So the buying power has disappeared, but gold has still got its value. I mean, gold and silver for the longest time was trading at 16 to 1. We can go back to biblical times. 16 pieces of silver for 1 piece of gold. Today, the ratio is over 100 to 1.
Yeah, there was talk on X this week. I think it may have been Goldman Sachs talking about it, saying that basically because central banks have been buying gold, and you still don't really have public interest in gold and, more importantly, silver, that now we have the new title for it, GSR, right? The gold to silver ratio, that basically it could remain elevated for a little while longer until the public basically picks up on silver and starts buying it en masse. So that argument made sense to me. I thought, yeah, okay. Like if central banks are just buying gold and they're not buying silver, then it's really just a matter of time until silver does take off. And my contention is that as gold gets more and more expensive or higher in price, people are going to make the economic decision to buy the cheaper metal.
Yeah, I mean, I was just going to get back to the story where I was taking back the gold.
Sure.
I needed to pick up the gold from one depository to take to our depository to Brinks in Peterborough. So it was about $1.6 million in product. I called my insurance company and said, I'm picking up 360 ounces of gold. I need to get insured to travel with it. No, we can't insure you. It's too risky. We don't want to handle it. You have to get an armored truck. You have to use an armored truck to take it from one place, which it was at a...
That sounds normal.
To Brinks. I mean, but it's very expensive. I mean, I could have just put it in a car, run it down, an hour and a half there and back.
I don't think moving $1.5 million worth of product is recommended.
I know, but I'm just saying they wouldn't insure it. So I'm just getting to the point that it's only going up in value. The insurance companies know that. They don't want to handle gold, even when we're shipping through our regular shipping companies. They won't handle, gold over a certain amount. They won't insure the value. And so it's scary.
Well, the fact that it's just getting more and more expensive.
Yeah.
Yeah. Well, that's only going to continue.
Well,
right?
I don't see...
The answer is higher prices means less gold.
Yeah. I mean,
right?
People who are buying ounces of gold, they've been forced to buy half ounces of gold
exactly.
or quarter ounces of gold.
Well, the other thing is that one of the reasons why people are buying gold and central banks are buying gold is that there's no counterparty risk and that there's no risk of bankruptcy. We've been following a story about Northvolt, which is a Swedish battery startup which filed for bankruptcy officially in March in Sweden. The problem is that a lot of Canadian pensions got burned on this. OMERS lost $325 million. There was basically $700 million in Canadian retirement capital, which just vanished because for some reason these pension fund managers decided to chase ideology and go after green rainbows.
Why do they keep on buying this?
I don't know.
I mean, whether it's windmills or solar panels.
Gold's up 700+% in the last 20 years. You tell me why pension plans are not buying something that has no counterparty risk. It must be because there's no management fees they can pull from it.
Well, gold is for your golden years. It's always been that way. So you're right. Why didn't they just buy the gold and sit in it? How much is gold up this year? How much is it up over the last 20 years on an average?
Man, I know it's up over 100% in the last 5 years.
Oh, that's a terrible return.
That's Canadian dollars. Yeah, so it's...
And that's US, not Canadian.
Yeah, I mean, I think over the last year it's up 35-40%. So again, you wonder why they're not doing it. Are they getting, I don't want to go too far down the road on conspiracy, but Why are they chasing this? Are they getting paid to chase this? Right? And the funny thing is you know what it is at the end of the day? Now, I know they've got fiduciary responsibility and such, but it's not their money, is it?
Nope.
It's not their money. It's easy to spend it when it's not their money. Oh, I like this. They're as human as any other central banker when it comes to making investments. But you would think that if you looked at gold and said, well, there's no counterparty risk, it is money, it holds its value, and yet they don't want to touch it. They don't want to touch it. So I think the reason we're talking about this is you have to take your own destiny into your own hands, consider your own retirement future, and if you have a pension, consider why is your advisor or the pension manager not recommending gold?
Because there's a one-time commission. There's no money in it for the average broker to handle it. We've been in the business a long time, and I see all types of things going on. You buy gold, you just put it away, you store it. In the long term, it's going to make you money. You don't day trade your house. You don't have to day trade gold. You just sit on it, and it just accumulates value.
You know, look, if the pensions ultimately won't protect your future, you can do it. You call 1-877-8-SILVER, the website guildhallwealth.com, and learn how to hold physical gold and physical silver in your RSP, your TFSA, or even privately, directly, you take delivery of it. In the next segment, Paul, I want to talk about the debt trap that Canada's finding itself in. They just are about to roll over $500 billion in debt, and wait till you find out how much interest we as Canadians are going to be paying on that. If you're worried about inflation, rising debt, the growing disconnect between your financial future and what's happening in Ottawa, you're going to want to listen to this segment. But first, at Guildhall, we do help Canadians take control of their financial future by holding physical gold and physical silver. You know, gold and silver are a perfect store of wealth. That's one of the tenets of what real money is, and that's what gold and silver have been doing for thousands of years. And you can look at the gains in the last 20 years, the last 5 years, the last 1 year, and you can see that it is performing the way it should, protecting you against inflation. Now, Paul, do you remember in 2020, Trudeau had a spat with a journalist, and he said, you know, Glenn, interest rates are at all-time lows. Do you remember that?
I remember.
Yeah. At the time, Canada borrowed $500 billion because there was a crisis. There was an emergency. They needed the money. I don't know for what.
500 billion paper.
I don't know what they needed it for, but they needed it. And the bottom line is now that debt is rolling over at 4% plus interest, which means us as Canadians will now be paying $20 billion a year, which is more than what we spend on national defense. Just consider one hospital costs $1 billion to create. So we are not building 20 hospitals. Instead, we're putting it just to interest payments. That doesn't go to GDP. It doesn't build anything. It's just interest payments that we owe. We get nothing for it. The question is what programs are going to be cut? What taxes are going to go up? How much more money is going to be borrowed to pay the interest on this and throw us into a massive debt doom loop? Your response to that just on its own.
It's just incredible. It's like even the US, they can never ever pay what they owe in the national debt. I mean, to pay $20 billion in interest, that's a lot of juice. That really is. I mean, that means there's less police force, less hospitals, as you said, less nurses, less doctors, all the services that we need. Look at the roads. The roads are awful. I mean, you can't get from one place to another, and I don't know who arranges how to put up all those orange and thing signs with nobody working on them.
Yeah, because that's the other thing.
Busy.
That's the other thing. You're going to get inflation, and then inflation, you get people who don't like the value that they're receiving for their labor, and so they don't put the effort out. Now, here's the thing:
but how do you pay back? How do you pay back $20 billion.
Well, I was thinking about it, and I remember this YouTube thing with Comey versus the Bank of Canada. And I remember them saying that all of the greatest things that we built in Canada were built with interest-free loans. So I said, so it can't be that this has always been the case. So I did some research, and I looked into it, and it used to be that pre-1974, the Bank of Canada bought the bonds directly from Canada, and we owed it directly to ourselves. So any interest that we paid, we effectively owed it to ourselves, which means it canceled. We didn't pay interest. That ended after 1974, and it was under pressure of none other than the Bank of International Settlements, the same entity that we've been talking about on the show a lot about remonetizing gold. But they're the ones who made the debt market-based. So what happened is after 1974, the Bank of Canada would take the bonds and issue it to the public. So banks, mutual funds, companies like BlackRock would buy the bonds, and effectively Canadians owe the interest to these public and private entities who are investing in the bonds, which is crazy because you think about it. You say, okay, your financial advisor says, congratulations, John, you're up 6% this year. And John never says, but we owe $20 billion in debt because of the bonds you put us in. Now, why doesn't the bank just go back to how it used to be? Why doesn't Canada just go back to how it used to be? Will there be political will at a point where you can't pay this back, and the only choice you have is to borrow the money where you're not paying interest? Do you think that there is any chance that the government of Canada could find the political will to say, this is madness, we should go back to the pre-73?
Yeah, but it all comes down to management. I mean, the government doesn't manufacture widgets. They just collect taxes. And the taxes are pretty high. I know. So, and then they go after people.
Yeah.
But do you think... I've got to bring that one thing up.
Okay.
The HST Department of Canada has now said that Guildhall Wealth is a financial institution because we sell gold and silver.
Right.
And we can't claim HST.
But we're not regulated under OSC.
Yeah.
We don't sell securities.
Yeah. We don't sell paper. We don't sell. It doesn't matter. It's so stupid that they're trying every which way to claw money back from businesses. And in the long run, businesses and the public are going to pay the taxes and the interest on loans. But it's bad management to start off with. It really pees me off when I see how money is wasted.
Yeah, and at the end of the day as well, think about it. You can't pay this back, which means if you got to borrow more money, then eventually your credit rating starts to fall. So now you have a question of Canadian financial credibility as well. So to me, eventually they might have to do the right thing, or there is another option. And the other option is that they could hold gold.
But that's not going to pay the debt off. They owe debt. And the only way, to recover when you owe money is you have to cut expenses.
Okay, hear me out, though.
I don't even want to go there.
Okay, hear me out.
For the simple reason, it doesn't matter how much gold the government owns. They can take it out of the ground. What are they going to do? Start taking over companies, taking over Barrick Gold?
No. The thing is I was looking into this. So right now they own 77 ounces. Right?
Of course. That's what
we've got clients who own more ounces.
We can lend money on that.
Yeah. We got lots of clients with more than that. And obviously it was sold off under when Carney was the governor of the Bank of Canada. But
did a real good job.
Yep. But how could you rebuild a gold reserve, and what would that do for your country? Now, you're right. It may not pay off all the debt, but what could it do? Here's my plan. First of all, they need to retain 100 ounces of gold annually from domestic mining, which they could absolutely do. There's enough mining out there. Another would be to go to the open market like China does, like Russia does, like every other country, and buy 100 tons a year as well. So you're getting 200 tons a year, and in 5 years, you've gained 1,000 tons. Now, to fork out $20 billion a year to buy some gold, you can find the money. If you can pay the interest, you know that they can find the money as well to buy the gold. And don't forget, gold is rising. So if it goes to $5,000 an ounce in the next 2 years, that is an actual government investment, something that they could sell to the public. So the fact is that what it would give Canada is borrowing power in a crisis. We know that the entity that stopped them borrowing at 0% interest or paying it to themselves is now remonetizing gold. So you'd have borrowing power in a crisis. You'd give back confidence to the Canadian dollar because we would actually have gold to back us. And it would be a backstop against financial instability, right? You know, one of the things about Russia before they went into Ukraine the second time is they bought a lot of gold first. And so gold's just kept rising and they're just making more money off of it to balance out the cost of the expense of wars.
Pays for the war.
That's right. So this is what I'm calling the Canadian Gold Reserve Restoration Act. And I believe it's actually possible. Now, is there political will? Absolutely not. Will they ever do it? Maybe they could be forced to do it, but Canadians could do it. If the government's not going to do it, then why don't you do it? There's something like 100 tons of gold owned privately, right? That's a drop in the bucket to what they actually need. So forget confiscation. That's not going to happen. That's not going to get them anywhere when they could mine it 100 tons every year, right? But if the Canadians could start actually buying gold, and gold does go to 5,000, 10,000, like many people are talking about. Jim Rickards, 2024, he said it could go to easily $15,000, and he shows you the math. The amount of money that would be privately created could actually get you the political will that you need to do it. And where's gold going to be in the next 5 years? What do you think, Paul? Where's gold going to be in the next 5 years?
I think $5,000 to $6,000 is very, very easy to get to. I mean, I'm just looking at where we've gone since, we've been in business since 2004. I was selling gold at $250 an ounce and silver at $3.80 an ounce.
Yeah, so if you think about it, if you go, Canada has to find the will to go back to how they borrowed in the past. They need to get assets on the balance sheet. And you're just going to watch the states do it. You're going to see, oh, we've got a sovereign wealth fund. We're putting gold in it. We're monetizing the gold. Here's our 8,000 tons. We're going to revalue it up to, $4,000 an ounce. Here's $1 trillion we can now borrow to issue more debt that we can use ourselves. All of these things. Gold is it's becoming so important to the globe, and yet Canada ignores it completely. I think we've got options that we can explore.
But even Canada, the government, ignores it. So does the public. The public really doesn't know anything about gold. They don't know anything about diamonds. They understand. The average Canadian knows about real estate, knows how to buy a condo,
and they're being hammered to go and buy Bitcoin, right? If you watch the mainstream media, that's all they talk about. They don't talk about gold; they talk about Bitcoin. Now, I was listening to Frank Giustra, who was saying, the reason they're doing is because they don't want the public front running what the central bankers already know, which is it's going to be revaluing much, much higher. So why would they want the public involved?
Well, as I said, the public don't know about it. They look at something, it's the same as gold and the same as diamonds. They can't see something small in their hand is worth so much, and it's going to go up more and more in value. As I said, they know about real estate. They know about flipping houses. They know about CDs, and they know a little bit about stocks. But about gold, only 3% of the world owns gold. So how much? There's 97%. Yeah, I got a gold chain or I got a gold watch. That's not owning gold. Gold is physical. It's bars. It's where you store your wealth. Gold is for your golden years. And, it's not that hard to buy. But you can't just walk into a store, which I guess you can, and buy gold. Again, there's a problem. With cash, there's a lot of people have cash out there. We don't accept huge amounts of cash. You can buy up to $10,000 with cash. You can't buy more than that the same day. Otherwise, we have to report that to FINTRAC. So, again, as gold creeps up in price, In Canadian, you're looking at close to $5,000 an ounce now. $10,000 buys you 2 ounces of gold.
You got to get used to it.
You got to get used to the fact that it's going to keep up. Crypto is another example. Bitcoin, when it dropped down as low as $14,000, they said it will never ever go up again. I mean, today it's gone through the roof again, and people own it. They're buying a dream, and if it's that automatic or quick impact of making money, people like to see they're making 2-3% a day, not 2-3% a year on a CD. I mean, it's gambling. It's throwing the dice. But if you've got gold, you've got silver, you put it away, you store it. As I said before, you don't day trade your house. You don't have to day trade gold. You buy it, whether you buy it on a monthly basis, whether you buy it one time and store it in a vault, whether you put it in an RSP or a TFSA. The TFSA is the best possible vehicle that you can put money in. That's a tax-free savings account. I think you can put up to almost, was it 100?
So over 100 now, just over
$100,000. And this year alone, if you'd have bought gold for $100,000, you'd be up $40,000. You could sell off a few ounces of gold, take the $40,000 profit, and go on a real nice trip.
The point is to just take that first step. You've got to go from the world of academic into the real. Pick that product up with your own hands. See what it's like. See what the market looks like over the next 6 months to a year. Feel the gains in the market, and then that confidence will help you to acquire more and say, you know what, I got to do more of this. The number 1-877-8-SILVER, the website guildhallwealth.com. At the top of the show, Paul, we mentioned this tweet by Robert Kiyosaki where he was saying why he loves Bitcoin, and the reason was that there's a limited amount. There's only so much. There'll never be any more. And we said, well, it's not like you add 100% to the gold market every year. You're only adding less than 2% a year. That's a very low amount to be adding every year. It's sort of like we're both on the exact same side of the spectrum. But it did also get me thinking, and I wanted to bring you in on this question. If you're looking for something that's just finite and rare, why not buy something like fine art? They're not making any more Picassos. Why not buy something like a natural fancy color diamond? It's not like, we've got a brilliant cut yellow diamond. It's not like you can find those ever.
No, you're talking about a diamond, a fancy, vivid, internally flawless, round diamond, brilliant diamond. There's probably only 3-4 a year come to market. That is not only an investment, it's something that's beautiful that you could put into a piece of jewelry and be proud to own it. But again, I'm going at the end of this month to the jewelry show in Las Vegas. That's where it's just a humongous show. I mean,
I was going to say, isn't that in June? And it's like, it's like we're already through the first week of May.
It's the last, 29th, 30th of May.
Okay.
But, a lot of the jewelers are worrying right now about the tariffs. I mean, a lot of jewelry is made in India and made in China. But if you're buying something rare, something that is beautiful, not man-made, something that it took millions of years to produce, and it's cut by artisans and turned into something incredible. And that 1.23 vivid, internally flawless, sells probably between $75,000 to $80,000.
But you get the bragging rights too, right? Because no one else owns that. You're going to have that.
You won't see too many of those.
Yeah, you probably not even find many people who know what you even have.
Well, people don't know about gold, so what do they know about natural fancy colored diamonds?
Now
give me a little bit of a break.
There you go. Now here's the thing. Obviously, unlike Bitcoin or gold, holding a natural fancy colored diamond is not a liquid asset, but that's okay.
You're not buying a natural fancy colored diamond to day trade or to sell, and have it for a year or two. It's something that you have forever. You pass down from generation. I mean, this is what we're seeing at auctions today, diamonds that are passed down from generation and are fetching incredible amounts, especially, large pinks and large blues. But yellows are the diamonds to buy right now, and we carry only intense and vivid. Those are the two highest grades. Internally flawless. We also have some pinks in VS quality, but these are the diamonds that you hold, you pass down, and your kids will make lots of money and be very happy.
I wanted to tell you something. Speaking of the crypto stuff, I had a client call. I remember he sold off all his gold, and he got into the crypto. And he called back. I don't know why he calls me sometimes. And he was asking about the market. And then he told me that basically he got involved in a crypto scam. He actually even had the nerve to ask me for $1,000. One of those scams where it's like, oh, we've got your money, but if we just need another $1,000 to unlock it, right? You got to be careful when you're getting involved in things. And that's not just crypto. That's also diamonds. I got another call this week. I didn't tell you about this. I got a call from a gentleman. He bought a 1.25. He was looking for a way to sell a diamond. I said, sorry, we only help our clients who have bought from us sell diamonds. But what do you got? I'm happy to let you know what you got. He goes, I got a 1.25 dark brown orange diamond SI brilliant cut.
$3,500.
If he's lucky, he might be able to get 6, but who's going to sell it? What are you going to make? Yeah, after costs, exactly. The fact is that you really have to stick with someone
What did
who
he pay?
7,000. The fact is you really have to go with a company that knows what they're doing and has been around long enough that you can trust them.
Right.
And all of the diamonds that we've ever sold at Guildhall were diamonds that we once procured ourselves, that we bought, that we put our own money into, that we can be proud of to bring to someone else. They're part of our collection. They're part of our curation. And if we help them sell that diamond at the right time, we can be confident about reselling that as well.
Yeah. I mean, every diamond we have comes with a GIA, Gemology Institute of America, certification of the diamond. Our yellows are all internally flawless. You won't find a collection that's only internally flawless. Go into the best jewelers, whether you go into Cartier, as an example, you may not see IF, you'll see VVS, you'll see VS. But at Guildhall, we only carry IF. We only go after the best quality, and that's what I've always bought. And
you got to know the rules to be able to break them too.
Yeah, but things don't sell automatically. When clients buy a diamond and think they can sell it, buy it today and day trade it tomorrow, it doesn't work that way. You buy it, you hold it. It's an investment. It will always hold its value, and it's a great time to buy because the tariffs are on right now of 25%. Who knows what diamonds are going to cost coming in from Israel or from Antwerp, that are cut.
And also inflation. It's only going to get more expensive. They're beautiful assets. They're worth looking at. Give us a call. We'll use the number 18778-SILVER. Go to the website, guildhallwealth.com. We're happy to schedule a time to show you a select diamonds that we have and show you how to get involved in the market, show you the type of gains that could be expected in the market and why, and find out if it's right for you as well. So again, the number 18778-SILVER, the website, guildhallwealth.com. At Guildhall, we can help you to buy actual physical gold and silver, whether you'd like to buy that direct. We offer only the highest quality products that are out there. That makes it the most liquid. No issues selling that product. Paul, you mentioned earlier in the show, client bought a lot of different random stuff. And while that's great, maybe they got great prices, who knows? Not always easy to liquidate because not everyone wants it. With us, we tend to stick with, Royal Canadian Mint product, 100-ounce silver bars, 1-ounce gold bars, a selection of kilo bars of silver and 10-ounce bars of silver, all recognizable brands that make it very easy to liquidate.
Yeah, one of the other things when people are liquidating, they want to be paid. Sure. And there's a lot of companies out there that you take your product and they say to you, well, it's a lot of product for me to sell. we have to sell it over the next couple of weeks or whatever, and they hold you up for the money. We don't do that. When client comes in, we tell you what the price is, and we cut you a check, send you a wire, do an e-transfer, whatever you want to do. But, people sell for a reason. They need the money.
Yeah.
And that's a simple thing.
Or they've got lots of reasons. We talked to them about those reasons. I had a client who was very nervous in the market. She was taking over an account from someone, a family member, and she really felt like the market was getting really hot. And after a discussion, we came to an agreement where we said, why don't you sell off? It was a smaller account. We said, why don't you sell off half of it? And then that way you feel like you can take the profit, but you're still in it. So if the market goes up, you can, take advantage. And at the end, she said, you know what, that feels really good. Let's stick with that. And I'm sure, I haven't spoken to her. It's been a few weeks, but I'm sure she's really happy because the price of gold went up like $200-300 right after. It came off a couple hundred. It's back up 100. But overall, she's, it's up from where we had that discussion. I also was speaking to someone. I want to just share this with you and get your thoughts on this, Paul. I was talking with someone, I think yesterday or the day before. Pick up the phone. He contacted us, said, what are you looking to do? How can we maybe help you? He said, well, I'm not looking to buy unless the price of gold goes down to $3,000 an ounce. I said, okay, all right. Talk a little bit longer. Well, how much are you looking to put in? Because that might affect how you buy into the market. He said, $150,000. It's not a lot of money. It doesn't mean anything. I said, $150,000 means a lot to even a billionaire. It's a lot of money. Don't tell me that doesn't mean anything, right? In my mind, I'm thinking that. I said, okay, if it doesn't mean anything to you, then just send it over, right?
Talk is cheap.
Yeah. So then we're talking, and I said, well, why don't you just buy 50,000 now, and if you get the lower price, you could load the boat and you've accomplished exactly what you wanted. But if the market goes up, what are you going to do? You've missed that opportunity. At which point he started to ask about pricing and was basically looking for like paper price for the metal. And I thought, well, if the 150 doesn't mean anything, if it's just too little a number for you, but you need the price at 3,000, and then you need the vapor on the physical. What are you doing? You're not serious, right? Why get into the market? Why are you looking at the market? What would you say to someone who's too caught up in the games of trying to capture the price or trying to get the best price? Like, I laugh with all my colleagues, and I tell my clients this, and everyone laughs. I said, I've never had a client come back to me after 10 years, 5 years, and say, I still wish I would have got gold $20 cheaper. Never. Even now, Nick's in the room. He's smiling. What would you say, Paul? What do you think?
You can never fish the bottom. You can never find, you just can't. A customer this morning asked me if I could change up some bars for 1 ounce gold coins. I looked at the customer's account. They bought in 2019. They bought 4 10-ounce bars, and they paid $1,300 and change an ounce.
That's pretty good.
Gold.
It's pretty good.
So today they were at 3360 US.
Yeah.
So I said, I'm happy to change it up for you. It's going to be a little bit change in buying.
Spend
gold
some
maples.
profit. Who cares?
Yeah. I said, but you've made all types of money. You made $80,000. So they were happy to take some gold maples and pay a little bit more. I tried to talk them out of buying maples. I said, buy bars, but you've got 10-ounce bars. Why would you buy maples? The reason, because they're giving it to their kids.
Yeah, and at the end of the day, profit opens up options. The more profit you have, the more options you have, right? Well, you want to know who has no options? Someone who bought a stock who's down 50%. That's a liquid asset, but you have zero options.
But again, they're giving it to their kids. They've got 4 kids, so they're giving
nice.
Like
They'll
7
probably
apiece.
come back and want to sell them.
And probably that's what they will do.
Well, Paul, I want to thank you for joining us. It was a lot of fun today. The number 1-877-8-SILVER, the website, guildhallwealth.com. You got car insurance, health insurance, life insurance. What about wealth insurance? It's a great time to be considering, especially with the revaluing of gold over time, all these central banks buying. It's a great time to take your financial future into your own hands, and at Guildhall, we'll show you how to do that, whether you're buying direct, having it in a vault for ease of liquidity, or even holding it as part of your own pension and registered account in your RSP, TFSA, LIRA, LIF, RIF, etc. If you've missed a show, catch us on YouTube, follow us on X, and thank you again, Paul, and thank you to all our listeners for joining us on The Real Money Show on 640 Toronto.